Then we need to capture country from customer, and hence we update customer as source field, and in the target field we update country shipped to, which is our user defined characteristic WW012. Table lookups can be used to access entire field contents or even part of field contents from certain fields. Move can be used to move certain fields from one source field to another. In our case, it is pair to customer. We move pair to customer. Reason being, we do not want to do analysis based on two different fields, customer and pair. All of the data will be analyzed based on field customer, and hence anything which is different for pair will move it to a customer field. You can also use clear functions to clear certain characteristic if certain condition is met. If all of the four derivation steps do not fulfill the complex business requirement for deriving certain characteristic, then we can use enhancement, and in this case we can use COPA user exit, COPA 0001, which has an include set x KKEU1, wherein step ID such as BR05 needs to be mentioned therein and attached in the enhancement derivation rule. In the enhancement derivation step, we then assign this step ID BR05 in the tab attributes. After the derivations are set up, we can then check the derivation analysis by clicking on this test button. The characteristic derivation screen comes. We can update all of the characteristics which are required and then click on derivation, which will populate the derivation results. We can also do a derivation analysis using K21S. So in this screen we update the posting date, the point of valuation being 01, which is actual, record type F is billing. Here we update company code, sales, organization, distribution channel, and customer. We then click on derivation, and then based on the customer, the country shipped to is determined, which is US. If you want to do a derivation analysis, click on extras derivation analysis, and you get how the system has gone through all of the derivation steps. So in this case, the profit center is active and country shipped from customer. So it has picked up the country shipped from customer. We go on to valuation. So valuation function is only available in costing based PA. Valuation is a functionality to provide additional information for a transaction. This additional info can be estimated, calculated, or retrieved from different sources. Example is access product costing module to get product costing information at the time of planning so that profitability can be measured. Example 2 is access SD pricing procedure to evaluate sales quantity during planning. Another example could be set up system to calculate incentives or transport costs which are expected at the time of billing document transfer. So sources for valuation, product cost planning, pricing from sales and distribution, or pricing in COPA. Time of value assignment, actual and plan. All of the valuation is basically a functionality available only in costing based PA and not in account based PA. Valuation strategy using material cost estimate. So here we define the valuation strategy Z01, actual, and the sequence. And here we switch on the material costing and the quantity field. So this is the value field which we had defined. So we assign this value field here VV012. Valuation strategy using costing sheet assignment. So we have created another valuation strategy, which is Z02 plan valuation universal, wherein we have selected application V. V is sales and distribution, and here the costing sheet is nothing but the pricing procedure in sales and distribution. So we are assigning the sales and distribution pricing procedure ZPR001 and updating the quantity field here VV012. Thereafter, we also update in the second sequence material costing and update quantity field VV012. So the idea is, if business wants to do a planning, just a quantity planning, let's say the business decides to sell that they are going to sell 10,000 products of A, 5,000 products of B. So they can update just the quantity figures in the planning, and what system will do is system will go and access this pricing procedure from the sales and distribution module, pick up the prices which are maintained in the condition records for those prices, discounts, and fetch you and evaluate the quantity with the value, with the prices, and give you the value for the sales. Also, if the product cost planning is done for that period, what system will do is system will go and access the material costing for that material based on the quantity updated in the planning and give you the breakdown of the cost, the COGS cost, which is raw material, packaging material cost, and the manufacturing cost, and tell you the total contribution margin in planning. This is the pricing procedure which is there in the sales and distribution module. So we have PR00, which is the price, cut discount, customer discount, and all of these. So all of these pricing procedure is accessed in the valuation strategy. So it is important that the pricing conditions are maintained in transaction VK11 for the planning year, so that it fetches the values and updates in the planning figures. Again, this is purely a business requirement. Not all businesses use this kind of functionality of accessing sales and distribution module to get the prices in planning. We can also use valuation strategy user exit. So we can assign a user exit in this step using user exit COPA 0002 with value U02 and assign here in the sequence. Now normally what happens is when the pricing procedure is accessed, it also accesses the VPRS condition, and VPRS condition is again duplicated in the planning for a manufactured product. So in that case, we can write an exit to ignore VPRS for this material type for a manufactured product. So that can be written as user exit. We assign the valuation strategy to the point of valuation and the record type. Now, valuation strategy Z01 was created for actual, and we assign it to the point of valuation, which is actual, and we assign it to the record type. Record type B is direct FI posting, C is settlement, and F is billing type. And we assign the valuation strategy Z01. For plan, we assign the valuation strategy Z02 for point of valuation 03, which is manual planning, and 4 is automatic planning with the various record types and version and the valuation strategy. Costing keys. Now, how does the system access the cost estimate? So in the costing based PA, we create these costing keys. In the costing keys, we assign the costing variance and the period indicator as to what should the system access, whether it should access the current cost estimate, the release cost estimate, valid on posting date, or goods issue date. So generally, we select release standard cost estimate matching goods issue date and release cost GL codes for the breakdown, so that the breakdown is captured in the multiple GL codes. based on cost component structure. And in case of it's not a standard price material, that the system will access the material price from the material management module. And the update in FI and UGL will happen at the time of PGI, that is post goods issue. When we are doing a goods issue for this billing cycle, that time the new GL will get updated. There will be no posting happening to cost center. Account based PA will be updated at the time when the post goods issue are done and based on the cost element. So here we define the COGS accounts as cost element, and these are updated in account based PA. The updates in cost based PA will happen at the time of billing, not at the time of PGI. That is the timing difference because of this timing difference. And it will happen based on cost component structure if it is a manufactured product, where we saw the assignment of cost component structure to the various value fields. If it is a traded product, then cost component structure will not come in picture. It will be the VPRS condition type which will be accessed, and